We recently witnessed the 56th GST Council meeting, a crucial platform where the union and the state governments come together to shape India's indirect tax framework. The Council's recommendations directly impact the businesses, consumers, and the economy at large. This session is primarily focused on rate rationalization, clarification, and compliance simplification. The proposed rate changes aim to balance revenue needs with industry demands, ensuring that tax burdens are fairly distributed while encouraging the growth. For businesses, these changes could mean adjustment in pricing, cash flow, and compliance structures. For consumers, the impact will be seen in the cost of goods and services. Overall, such decisions shape the ease of doing businesses, competitiveness of industries, and government revenues. As we reflect on the outcomes of this meeting, it is important to evaluate how these shifts will affect our sector's operational cost and strategic planning. Hi, I'm CA Dipti Jain, co-founder Gyaanstation and Vice President Choice Connect welcomes you in today's webinar. To deep dive into the latest changes in GST rates, we have invited two eminent speakers, CA Rasmeen Vajaji and CA Amish Kandarji, to our platform to enlighten us on the recent changes.
Good evening to all of you, and special thanks to all the three associations for giving us one more chance to share some of our thoughts on the GST. I, along with my partner Rasmin Bhai, we have around more than 130 slides today. So, and I think last 10-15 minutes will be Q&A, whatever questions are there on ITC, on anti-profiteering, on any kind of IDS or kind of any kind, even though it is not related to 56th GST Council, kindly ask the questions. We will try our level best to answer them and to enrich ourselves also, because based on questions, we enhance our knowledge as well. So thank you again to Gyaanstation, Dipti Ben, Asutosh Bhai, Anand, Maulik Bhai, Viswesh Bhai, and the introduce very kind introduction, CF Anil Bhai. Uh, what I would like to set the entire theme of today is one and a half hour, I think, or 1 hour 45 minutes. This was a very welcome and very much needed step. If we look broadly as a macro level, this should have been done even perhaps 1.5 to 2 years back at least. But it's a welcome step. We have been watching these GST Council meetings. I'd been part of in 2016, just by this time, September, October, when we were calculating with CGST department, Sri Waghela sir and Ajay Jain sir from Central GST, who used to be Principal Chief Commissioner. Now both officers are retired, but at that point of time, we were calculating 29 states excise, then service, 29 states excise, service tax, VAT, CST, Octo, and all put together if we merge, because that was a combined figure. That government was also a kind of calculation, 1,10,000 crore, 1,15, though we could not achieve at that point of time. But yeah, later it has been overachieved, one can say. So we can all see that in the month of August 2025, we have a collection of 1.86 lakh crore, as we all know. And based on the rate rationalization that has happened in 56th Council meeting, which was to be convened for 2 days, but somehow they got consensus within one day. They by 9:30 they could complete the council, and 10 o'clock they had a very good press release of 80 pages plus 40 pages, and the press conference, press release, and guidance note, and all that. So they had really worked very hard. I think even though it is late by 1.5 to 2 years, but much needed, looking into the Trump's tariff, all this embargo, and sluggish market in the demand. Because we all interact as a consultant with so many industrialists, so many SME and medium businessmen. So there is a strong need of the push for the economy. And by way of this rate rationalization, there is an estimate only, but 7 to 8,000 crore at least per month will be. So in a year, 1 lakh crore will be the reduction in tax collection, though they have they've put so many other things into 40% bracket that we will see in over a period of time in next slides, that like juices and Coca-Cola and maybe so many other things. I was just a panelist with Ministry of Food and Processing in the morning, wherein Mother Dairy and Indian Bakers Association and Food Manufacturing and Beverages Association, around 35 associations were there, along with directly talking with Joint Secretary and Under Secretary of Ministry of Food and Processing. But one thing which I have at macro level, I would like to mention, the government is very much open now. When we talk with officers, including ministers also, they want to hear the concerns of the industry. They want to hear some of the observations of the consultants like and the associations like yours and us, and they want to try to understand and implement whatever best they can. So again, we have been naturally, we all are representing a lot, but I would suggest that come with whatever kind of hurdles we have, we can together represent, and they will sincerely, like you can see just now only Rasmin Bhai is next to me only, MRP based circular has just come out before 3 hours only. So that is there in your presentation, right? So it is there in his presentation. So whatever concerns we just discussed in the morning only, that stickers would be allowed, meteorological department, certain strictness would be relaxed, as well as anti-profiteering. One of the major point was there. If you see, there is a there is a reduction from 12 to 5%, but the prices will not be reduced by 7%, because what will happen that entire, if there is an exemption or there is entire input tax credit, whether it be goods transport or so many other job work services and all that, they all come with 18% bracket. So there will be a not a duty structure that we will also have to think. And what is going to happen with the industry also is, the ones if the prices are not reduced as per the expectation of the government and the public, government will be after industries, like it had happened in the case of builders also. If you can recall, 3 to 4 years back, there were so many cases of anti-profiteering and hundreds of crores of notices were issued. So section 171 is still alive. Anti-profiteering, they don't accept applications as of now, but it may open Pandora's box again, and industries may have to face the anti-profiteering. So I also requested in the morning only, please, yeah, there will be black sheeps everywhere, but you can't generalize everything. So government will also have to have a balanced approach, and this 1 lakh crore they will compensate from maybe 40% and demerit goods, and maybe uh, increase in the demand in the industry, which is there. Because in auto sector, you will see in one of the slide, BMW X7, it used to be 1.35 crore, now it is for 1.25 crore. So 10 lakhs. Tata Motors has also, on Twitter you must have seen, and press release also, that they have reduced 80,000, 90,000, 1,35,000 to the maximum. So those are the positive outcomes. Every company, every industry wants to capitalize on the rate reduction so that they can achieve their target, they can achieve their market share. So it's a good welcome step for all the people at large. And like insurance sector and so many cases they have reduced, and that benefit will surely be passed on.
Excuse
And
me, sir. Sir, your PPT is not being
yeah,
shared, which you have
yeah,
shown.
yeah. It will be shown
Oh,
within 2 minutes only. I'll just,
okay, okay, sir.
yeah,
Okay.
I'll just
Just
complete
found
the
we are not
initial.
missing on
Yeah,
anything.
yeah, yeah, yeah. No, no.
Just
So PPT
yes,
is
sir.
the
Okay.
masterpiece of Rasmin Bhai. So
Okay.
he has put me in the Margdarshak Mandal ke you have to just come and you have
Okay.
to deliver for 10 minutes, and then entire film or entire movie, it will be on his shoulders. So it's there.
So,
Uh,
so you are setting the pitch of complete
yeah, yes.
understanding and crux of the 56 GST Council. Yes, sir.
Yeah.
Wonderful.
That is the, yeah,
Wonderful,
that
sir.
is the,
Please.
that is what my role is mostly, to
Yes,
talk with
yes.
ministries or the associations and all that. So I would again, to summarize some of my thoughts, please be careful on anti-profiteering. Even government will have to, and industries. Second, this increase in demand, it will all help to industry people and consultants. There will be so many issues also. There is one lecture on Gujarat Chamber also on 12th, and so many other lectures. Kindly, I would request attend. And one more last thing I would like, yours all association to demand as a pre-budget memorandum is the amnesty scheme under section 74, which was discussed even I think 54th GST Council meeting also. But somehow certain states protested a lot. So from Gujarat state, it was amnesty scheme under section 73 and 74. It was very well proposed, but somehow it could not sail through at that point of time. But 74 is very much needed. There are endless litigation, classification, and all that. So we all will have to represent it. It's on their cards also. So maybe in the month of 1st February, whenever the budget 26 will come, they can get it through the parliament by way of budget. But that 74, if tax is entirely paid, then interest and penalty can be waived off. And that will reduce a lot of burden on the industry, on consultants, on government as well. And I think one more thing is the bogus billing that we all know. We will all have to be careful. People have now become a lot of careful. And I think I've been proposing that there has to be a separate amnesty scheme for fake invoicing cases also, because there are so many genuine people who are suffering. So that's all from my end. I think there are 125, 30 slides. Dasmin Bhai will take over. I am also here. So at the end, whenever questions are there in Q&A, I will again join. And once again, thank you so much for inviting me and giving me a chance to share some of my thoughts. Thank you so much.
Thank you, sir.
Thank you, sir.
હવે રોહિત શર્મા બેટિંગમાં આવે છે.
Opening हो गई. Opening batsman has done. Now we are
रोहित शर्मा
waiting for
रिटायर
a
देख रहे हैं.
लंबी पारी का इंतजार.
Yes. So, everyone, I am very glad to introduce our speaker for the day, Mr. Rashmin Vaja sir. He is a chartered accountant since 2004 and he is a partner at KMS with Amish sir as he introduced. He specializes in consulting and litigation in indirect taxes, wherein he is serving both Indian and multinational corporates. He is passionate about simplifying tax matters for clients, offering strategic guidance and delivering results. He has also taken the training sessions for officers from the service tax and the GST department, as well as for the office of CAG at Ahmedabad office. He is regular faculty at Gujarat State GST Department Training Center, wherein he is training to the newly recruited officer. He is also visiting faculty at EDI Gandhinagar. Welcome, Rasmi sir. The floor is yours.
Thank you so much. At the outset, I would like to thank my dear friend Maulik Bhai, President ITBA, Ashutosh Bhai Thakkar, Fenil Bhai, and Dipti ma'am for inviting us and letting us to share our some of the views on this pre-Diwali bonus type of GST Council meetings recommendations that we are looking at. A lot of positive parts are there, but we are just going to point out certain things which needs to be taken care of. Some details have been shared by Amish Bhai, but straight away I'll start with my presentation. So as of now, it's like 17:25, 5:25. So Maulik Bhai, till how much time should we continue, and after that we'll have Q&A.
So take your time, it's okay.
Okay, no
It's not an
problem.
issue.
Yeah. So these are certain key expectations that has been fulfilled in GST 2.0. So that's what we have been saying, that GST 1.0 came back around 7-8 years back, and now we are looking at GST 2.0. So simplified GST slabs that has been talked about a lot, and now we are having two standard slabs, that is 5 and 18%. 40% is for some of the goods, and 12% and 20%, 28% has been eliminated. Rate rationalization is there at a major stage. The rate rationalization is okay, but at certain point in time, see, because what has happened, that there were earlier 5% rate, 12% rate, 18% rate. So the delta between all the three rates were around 76%, 76%. But now the delta between the two standard slabs is around 13%, between 5 and 18%. So certain misclassification or certain loopholes in rate rationalization will land up in the difference of 13% that we'll be looking at. Correct. We will discuss in upcoming slides. Facilitation of compliance. So inverted duty structure, it has been addressed clearly, because as I pointed out that two slabs and delta is around 13%. So there will be inversion of 13% in many of the cases, wherein that inversion need to be addressed. And for that sake, refund provisions of refund will be changed, that 90% of provisional refund will be granted at the outset on the filing of GST refund application. Ease of registration, it has been very talked about thing, that there is a difficulty in getting registration nowadays. And now it is said that for startups and MSME, they are going to give an option of getting the GST registration within 3 days, with some of course conditions attached. We'll discuss that. For 7 odd years, we have been waiting for dispute resolution by way of second appellate authority, that is GST tribunal, and a standardized advanced ruling authority, so that there are divergent advanced ruling across the country are standardized in some format. So that has been addressed, and that will be looking in coming future. GST tribunal being formation of GST tribunal and operationalization of GST tribunal is just around the corner. That has been discussed by the GST Council meetings press release. There is a lot of support to MSME for the higher compensation threshold and faster refunds. That is what we will talk about. Amish Bhai pointed out that we were looking at something more. Apart from these all key expectations that are fulfilled, we were also looking at amnesty scheme under Section 74, automated compliances, higher registration threshold. Because when we were having the GST, there was this collection was around 90,000 odd amount per month, which is 1.86 crore as of now. So certain clarity on UPI based notice, you all have faced this IIT Hyderabad, no, that software based notices that has been received, and based on the UPI transaction notice has been received. So we needed some clarity to protect the small vendor and to channelize the entire litigation process in a proper format that has been talked and discussed in by the provisions of GST law. And refund of capital goods, which is stopped in case of certain scenario like under LUT, that reduces the working capital blockage. Because if I go and select the with payment of tax option, then this ITC is a refund of ITC on capital goods is available. However, in case of ILUT without payment of tax, the capital goods is not available. So there is no point in having this distinction once this 9610 has been deleted. So that lands up in the the with payment and without payment tax refund should be at par without any distinction. So this is something that we were expecting, and now we are expecting it from GST 3.0. Initially, it was talked about that we are having a good and simple tax. So now after this GST 2.0 press release, or what has been discussed, recommendation has been given by the 56th GST Council meeting, we can say that it's slowly and steadily moving towards what it was supposed to be, a good and simple tax. And at this point in time, I just want to quote Ved Vyas ji's thought on the taxation by the state on its subject. It has been said that the king should behave like those bees which collect the honey without causing any harm to the tree. So it has been quoted by Justice Vinit Kothari in currently Karnataka High Court's judgment. So this is what we are also looking at, and now we can feel that GST is slowly and steadily moving towards this type of situation, ideal situation. A lot many, or rather each and every sector has been touched upon by the council in this council meeting, and having a lot of reduction. Because see, the purpose or the main purpose was to eliminate the 12% slab rate and 28% slab rate and compensation cess that we were looking at. So the 12% slab rate needs to be, the goods or services that are there in 12% slab rate needs to be moved either in 5% or 18% based on the internal discussion that we were having. But this is the mostly the in and around on all these sectors, whether it is consumer sector or industrial sector or service sector or any specifically from the insurance sector. So that type of tweaking with the GST rates has been taken place by way of rate rationalization. So what all the major reforms that are there in this GST are GST 2.0, a simplified GST structure. So standard rate of 18% and merit rate of 5%, demerit rate for a limited luxury and sin goods of 40%. And it has been clearly mentioned that this new rate will be applicable from 22nd of September 2025. So we'll expect the relevant notification to be issued for this particular effectiveness. And we also expect certain clarifications issued by way of circular. Then there is a complete exemption given to essential food items, a lot of medicines, life-saving drugs, and life and health insurance sectors. A lot of rate reductions in daily essential food products. So 99% of food products are now into 5% tax bracket, which were there in 12 and 18. So everything has been moved from 12 and 18 to 5% even in case of most of all the food items. Medical devices and supplies also reduced to 5%. Agriculture machinery also reduced to 5%. Automobile sector, very effective change that they have given. And as Amish was saying that a lot of car manufacturers have declared reduction in rate on account of this GST rate rationalization. So small cars and motorcycles up to 350cc and three-wheelers have been reduced from 28 to 18%, along with this transport vehicle and ambulances, etc., have been moved to 18%. But for luxury motor cars and motorcycles above 350cc are increased to 40%. Textiles and yarn again, so man-made fiber and yarn from 18 and 12 to respectively to 5%, for fertilizers to 5%. Passenger transportation services, of course, non-economy classes, it was there in 12% bracket, it has been increased to 18% with ITC. And motor vehicle passenger transport, that has been increased to 18%. GST tribunal, it will be operationalized by end of September 2025. So as of now, we are into 9th of September. So we'll soon have some news on the operationalization of GST tribunal. And hearing will start by December 2025. So I request all my advocates, brothers, and consultants to take out their black coat, which was hung up till the tribunal was getting operationalized. So now shortly that our black blazer, black coat will be of use day in and day out. Refund mechanism: 90% of provisional refunds and IDS and zero rated supply to be start from 1st of November 2025. Of course, they've said that in effect it will start from 1st of November 2025, but a lot many changes needs to be done in GST law and GST rules. But in principle, they'll start issuing 90% provisional refund from 1st of November 2025. We'll see how this department takes departmental officers takes into consideration this type of declaration by the GST Council. Refund process is to be simplified, and e-way bill needs to be continued. Existing e-way bill will be valid post change, even if at all there is some goods in transit, and there is no need to generate a new e-way bill. So these were all points. Now something that can be considered as an issue or something needs to be checked upon. Input tax credit will be blocked because the rate has been reduced, and on certain items rate GST has been rate has been zero and exempted from the GST. So in that case, ITC will not be available. So artificial inflation of price might be there in the prices where the ITC cannot be taken. If at all, of course, it is a very ideal situation that 90% of GST refund will be, provisional refund will be issued by the department, and in principle they was agreed that they'll start issuing from 1st of November. But it will only be useful and fruitful if field formation also will start issuing this type of thing in principle, rather than complicating the matter regarding the documentation requirements and long processing time. Because already we are facing in such a scenario that whenever refund application is filed, within 15 days they need to give an acknowledgement. So on 14th day we are receiving this deficiency memo, and then we have to start back from the square one for the entire refund process. So that mindset also needs to be changed when we are looking at this implementing this beneficial provisions or changes that has been recommended. Increase compliance burden. So yeah, having this change of rate somewhere in mid of month, so 21st of December old rate, and after 21st of December, that is from midnight of 21st December, 22nd of September, on September, a new rate. So you can imagine what an accountant needs to be doing, what a tax consultant needs to be doing, what all changes needs to be done, T code changing, and stocks needs to be updated. We'll see in short time about the MRP that has been issued recent. No, notification has been issued. So documentation and record keeping will be a lot challenges will be faced by the businesses. Automobile sector, again, this reduced rate sales are that existing stock will be having compensation cess. What to do about that compensation cess that is lying at the stock at a dealer premise or maybe at distributor premises, that also needs to be addressed. Of course, it has been talked a lot in social media. Right now, we are living in the age of university of social media, university of WhatsApp, and a lot of news are being posted and forwarded on the social media. So we need to be careful. I have covered one of such fake news being posted by one of the very renowned journalists also. We'll discuss that also. So we have to be very much careful to check and verify the source of the news that is coming forward, rather than just reposting or re-forwarding something that is being received as a forwarded message. Increased litigation risk. So as I said, that delta is of 5% to 18% is 13%. So if by mistake I misclassify certain goods or certain items, then what I'm looking at is the difference of 13%, and department will coming after me at a later stage, maybe 3-4 years after I have conducted all the transactions. That is again a big problem. So that needs to be very much taken care of. The refund related disputes, as I said, what experts have to say that MSMEs stand to gain. Of course, they're going to stand to gain at a later stage. Lower compliance, cheaper raw materials, improved competitiveness. States may see mixed impacts because states are still skeptical about that how this revenue sharing mechanism will work and how they will the revenue will be having to have the impact. FMCG sector, consumer durables are clear winners because of the rate reduction, but luxury apparels and this motor car dealers in coal sectors will face certain issues with the hikes that are there. Festive boost is expected because somebody was asking me that, look, the rate have been reduced by the government, but how will you make sure that government reduction in rate will eventually benefit the customers? How will they pass on the benefit to the customer? See, one thing is that the government is looking. I mean, there has been a tweet by, or maybe a statement by our finance minister, that government will looking at the rate reduction and the effective benefit being passed on to the customer. So that is one point. Now, what is that on from 22nd of September, we are having Navratri, and immediately after this Diwali festival will be there. So in normal circumstances also, we are having a lot of schemes and benefits being passed on to the customers to cover that market share, because that is the main period of any business, to cover the market share, to boost the turnover. So that can be one of the key indicators or key reason of passing on the benefit to the customer, irrespective whether government says or not, because that is where there will be a rush to attract the consumer, to attract the customer, and to cover the market share. So that is what something psychological effect that we can look for these festive seasons. These are implementation timelines, because in the entire press release, couple of dates has been spelled out. The changes in goods and services will be effective from 22nd of September 2025. But for certain goods like pan masala, gutka, cigarettes, chewing tobacco like zarda, unmanufactured tobacco and bidi, the rate will not be notified on 22nd of September 2025. It will be notified at a later stage. So it will the existing rates of GST of 28 or 18% plus compensation will be continue to be levied on these products or these items, except these items all will be shifted to new rates from 22nd of September. Then, as I said, G state will be made operational before the end of September 2025. G state will commence the hearing from before the end of December 2025. And as of now, we do not have this portal accepting the appeal that needs to be filed before G state. So all the backlogs of appeal that are yet to be filed as of now, the time limit will be given by the department is 30th of June 2026. So before that, all the appeals that are remaining to be filed needs to be filed. And after that, that 3 months, that is 90 days, that is limit that is available from the date of receipt of OIA, order in appeal, will be applicable once this backlog is clear. Sanction of 90% provisional refund for zero rated supply in inverted duty structure and the GST registration scheme from small and low risk business will in principle kick in from 1st of November 2025. Of course, the amendment in law and rules will take its own sweet time, but in principle they'll start follow this particular process that has been promised in the press release. The rest of the things, very important thing, that is place of supply provision related to intermediary services and amendment in section 15 and 34 in respect of post sale discount will be notified in a due course, because these are certain amendments that wherein act needs to be amended. So IGST Act and CGST Act needs to be amended, and that amendment cannot be done by way of mere issuance of notification, but it can be done only by making an amendment in the act and as passed on by the parliament. So that will happen only at the time of budget on the 1st of February. This is very important that, okay, you said that rate will be changing. So rate will be changing. So it's like this change in rate is like, changing the engine of a fast moving bullet train. Business is not going to stop. Business is not going to hold for accommodating this particular change. So what should be the rate applicable on a particular supply that needs to be identified? We have a clear, section 14 provisions applicable in this type of scenario, that in case of change in rate, what should be applied at, in which situation new rate will be applied, in which situation old rate will be applied. So we have to identify three elements for a particular transaction. Then when, on what date the supply of goods or services happens. Second, on what date the invoice is being issued for that particular supply. And third, on what date receipt is, payment is being received for that particular supply. So supply transaction, issuance of invoice, more or less supply and invoice date will remain same in most of the transaction, but that can be some difference. So three elements: supply transaction, supply date, issue of invoice, and receipt of payment. These three points are identified. These three elements are identified, and out of these three, if any two are, before 22nd of September, then old rate will be applicable. But if any two items are after 22nd of September, then new rate will be applicable. This is basically thumb rule. Of course, I've put down this, whatever I said, I've put down this in chart format, specifying each and every situation. For example, if we say that if supply of goods or services is before the change in rate, and invoice is issued after change in rate, and receipts is after change in rate, then new rate. But if supply is before, invoice is also before, but receipt is after, then old rate. So in here, two events are happening before change in rate, and one event is happening after change in rate. Similarly, if supply is done before change in rate, payment is also received before change in rate, and the invoice is issued after change in rate, then also old rate will be applicable. So out of these three event, any two event happening at that at what point in time will decide whether old rate is applicable or new rate is applicable. This is that example illustration of that particular understanding that we were giving about which rate will be applicable at what point in time. This is very interesting statistics, because the moment we said that our 12% slab is going to go, then we were curious that what is the amount of or percentage of revenue that was earned by government on this particular slab. And it was answered somewhere in parliament session by when it was a question was asked, and the government replied that around 5 to 6% is the only share of revenue in absolute terms out of total revenue. So if we say that last month's revenue is 1.86 lakh crore, then out of that only 5 to 6% belongs to 12%. So it was so easy to eliminate that 12% slab and move certain items to 5% and move certain item to 18%. And if we put an average, then I don't think we are going to lose. I mean, government is going to lose anything about it. These are number of items in a particular slab rate. Exempted goods are 150, exempted services are 173. Others are that, other rates, there are miscellaneous rates are 5 and 3. 3% is basically for that precious metals, jewelers and all. So that is again is a very specific rate. So majority are now in 5%, that is 566, and 18% 637. we could find one service and one goods which are still there in 12%, I think they will make sure that it will be removed, and 0% will be there, 0 items will be there in 12%, and for goods and services. So 28% after this 22nd of September, no item will be in 28%. 17 goods will be in 40%, and 3 items of services will be in 40% rate. So Amish Bhai was saying that what to do. So this is what I was saying, that statement by our finance minister, that the presumption, when I say I will closely monitor, that implicit. But to be fair to the industry, many have voluntarily said that they will pass it on. I would like to trust them. So they will closely monitor. If at all some complaints is received and something is that needs to be taken care of, then government will surely kick in the anti-profiteering measure again. Important thing is that this notification was issued which said that anti-profit authority will not accept any request for examination regarding this passing of input tax credit. But that does not mean that section 171 is deleted. Section 171 of anti-profiting measure is still there. So by way of notification, certain, another mechanism can also kick in if government may feel that this rate rationalization is not been passed on by the business to the end customer, that this will happen, that in some format and some way or other, this section 171 will have another effect to that particular state. GState will be empowered to examine if the ITC benefits or GST rates are passed on or not. So again, after the national anti-profit, the NAPA is no more accepting, but again, GState will have any price to check. A senior government officials told TOI that indirect tax authority is correcting current prices of goods and services and will compare them with the prices once the new GST rates kick in. Okay, so that's again, so this is very, very, very well thought recommendation that has been given. So don't feel that it will be, just passed on or just will be ignored by the department or by the government. It will be very much having a keen eye on those particular items. So we just tried to put down that existing rate is 12% and it is reduced to 5%. There is a difference in rate of 7%, but there will be certain things that needs to be changed, inclusive of etc. So effectively, it can be maximum 6.25% needs to be changed in current MRP status. That is something that we have calculated. We'll see in detail this type of calculation in coming slides. Now, as we were saying that relief of rationalization needs to be passed on to the customer. So Amul has already declared and said that we are going to pass on the entire benefit to the customer and the producers. That has been said by MD Jain Mehta of Amul. In case of insurance, because there is an exemption in the insurance, so NIVA insurance says that whatever benefit we have received, so in individual insurance premium, it is an 18% GST, and now it has been shifted to 0%. So entire benefit of 18% we are going to pass on to the customer without retaining any benefit or any loss in case of ITC not available. That also we are going to suffer, and we are going to pass on the entire benefit to the customer. So this is a very, very welcome and nice change. Tata Motors again have reduced the potential prices of various cars and SUVs. X7, as Amish Bhai was saying, that in case of BMW, they have before GST. This is a tweet by CNBC regarding the rate reduction, and lot many. I mean, recently MG has also declared certain reduction. So all the automobile sector have started declaring the rate reduction. So as I was saying, that there will be a mad rush to attract the customers and cover the market share in this particular festive season. So irrespective of rate rationalization, this type of advertisement we used to see in these festive seasons. But now it's a really would be a good festive season for the end customers. Now, recently, I mean, today only, a legal metrology division issued a circular saying that how this particular change in GST rate will be implemented by the persons for whom MRP is applicable. So it has been said that dual prices should be displayed. So original MRP must be visible, and it should not be overwritten by the revised MRP. You can stick a sticker of revised MRP, you can put a stamp of revised MRP, but side by side original MRP must be visible. Restriction on hike. So revised price cannot exceed the actual GST increase. So if certain prices which were there in certain goods which were there in 12% bracket, and it is shifted to 18%, so it cannot increase more than 6%. In case of reduction, benefit must be passed on to the customer. So it has been very clearly given. Public notification, mandatory advertisement in at least 2 newspaper plus notices to dealer and legal metrology authority. So these needs to be followed, that you need to have an advertisement at least 2 newspaper about price reduction. You need to give a proper circular notice to your dealer and distributor, and also give a letter to legal metrology authority about this particular changes that you are putting then in MRP based valuation. Old packing material can be used with revised MRP being shown by stamp or sticker or online correction, but it needs to be used till 31st of December 2025, or maybe stock whenever the stock gets over for that old packing material. So old packing material can be used only maximum up to 31st of December 2025. After that, it cannot be used. You will have to reprint the new with the new or revised MRP. And if at all there is some old packing material, you have to let go that particular packing material. This is that circular that I'm talking about, issued by the Government of India, Ministry of Consumer Affairs. Now, as I was saying that in case of price, there is an ITC restriction. So if certain items from 12% is moved to 0%, then in that case, of course, we can feel that, okay, as a customer, I'm going to get the entire benefit, because earlier it was 12% and now 0%, or maybe 5% and now GST is 0%. But when we say that a particular item is exempted or is taxed at 0%, then you need to have this thought in back of your mind that whatever ITC was eligible at a 5% rate or maybe 12% rate, which has been moved to exempted item, then that ITC benefit is not available. So that ITC benefit or blockage will be adding to the cost of that particular item, and it may artificially inflate the price. So that has been mentioned somewhere in the FAQs issued by the council on 3rd of September 2025. FAQ 21 and 23 specifically deals with this type of understanding, saying that this may in turn be passed on to the customers or patient in form of higher prices, which in turn would make the measure counterproductive. So, and there need to be a balance between both. So ITC is not available, I can increase my cost and simultaneously increase my price, but eventually have to take care of the rate rationalization and reduction in rate. We'll see by an example how it can be taken care. There is a key question coming out that in case of compensation cess, what needs to be done about this balance lying in as a credit in my credit ledger about compensation cess. For example, I am a automobile car dealer. I have purchased a certain car from the manufacturing company. On those purchases, the invoices issued by the manufacturing company was GST 28% plus whatever compensation cess is there. Now, as of now, it's very logical that no customer will come and buy the car at this particular rate when this rates have been reduced from 28 to 18%. So as of now, that stock is lying with the automobile dealer. Along with the stock, there is a balance of compensation says lying at in the electronic credit ledger of that particular automobile dealer. Now, what needs to be done, because there is no clarity about that compensation says, and a rough estimate is that at present, at present, the amount of compensation says lying across the country with various dealers or maybe distributors or manufacturers is around 2,500 crore. So that is the amount we're looking at, and for that we have represented before the government that you need to give certain benefit to this particular businesses wherein electronic credit ledger are having balance of compensation assets which cannot be utilized, because after 22nd of September there will be no further levy of compensation assets, and it cannot be used against my CGST, SGST or IGST liability. So that's what we are looking at. One of the biggest problem we are having. This is basically specific GST procedural amendment. 90% provisional refund to be given, inverted duty structure refund to be to be put on accelerated mode, then refund removal of threshold limits. So section 54(14) had an basic limit that if there is a refund of less than 1,000 rupees, you cannot file the refund application, but now that will be removed because small exporters who were exporting through courier and courier bill of shipping bill, etc. They might be having individual refund of less than 1,000, but if you accumulate, it may run into lakhs. So that threshold is supposed to be removed. Simplified GST registration, intermediary services needs to be removed, and export benefit will be given. And optional single registration for small SEZ suppliers selling through e-commerce across all the states will be also taken into consideration. Now, what important was that this is something that we thought about giving, that there are a lot of changes from 12% to 5%, but there are certain things that are mandatory in services. That 5% is mandatory, is no option. But in certain cases, it's 5% and 18%. So we have put down clearly that these all our items are mandatory. From 12% to 5%, there is no any other option. And out of that, if you can see the first item and the last item, it is 5% without ITC. So hotel accommodation, where this room rent is less than 7,500 or less than or equal to 7,500, then 5% is compulsorily to be levied, and no ITC will be available for that sake. And same is case of the physical and beauty wellness being services, wherein it was 18% with ITC, but now 5% without ITC. In all the other cases, job working and etc., it is 5% with ITC. So that was mandatory, and this is optional. In case of GTA, in case of passenger transport, if you want to go with 5% with ITC, or if you want to without ITC, or if you want to go into 18%, then it would be with ITC. In most of the cases, it's 12%. So from 12%, it is shifted to 18%. So this clear distinction needs to be understood and then accordingly applied after 22nd of September 2025. Rate rationalization for daily items, very, very nice, very, very good. Tooth powder, shaving cream, so certain personal care and hygiene, household items like table care and kitchenware, furniture and combs, certain miscellaneous other household items like candles and wooden tableware and kitchenware, brass, kerosene stove, all have been shifted from 12%, or some of them were in 18%, have been shifted to 5% with ITC. Needs to be understood in case of goods, it's always with ITC, because 5% without ITC is generally in services. In case of goods, it will always be with ITC. Baby care and infant products, 12% shifted to 5 with ITC. Lantern, bicycles again shifted from 12 to with ITC. Now, this is the pricing example that I was talking about. In case of MRP based valuation, what needs to be done? So, if any particular product is, say, MRP is having 100 rupees and GST is levied at 12%, then what would be the value of GST? The value of GST or amount of GST will be 12. So, value of that particular product will be 88 plus 12, and that lands up to be 100 rupees of MRP. So, we all know that MRP is basically inclusive of all taxes, and that is to be collected from the customer. So you cannot collect anything more than 100 from a particular customer. Now, when we say that 12% has been reduced on that product which was having MRP of 100, and 12% is reduced to 5%, then one may say that okay, I'll collect 100 rupees only, 95 plus 5. But that's not the case. That's not how you will pass on the benefit. I mean, in that case, you are not passing on the benefit to the customer, right? So to pass on the benefit to the customer, you need to understand that in case of MRP that was printed in old rate, what was the value of GST? The value of GST was 88. So that you have to adopt plus 5%, and that lands up 93, the final price with the customer, and then benefit to the consumer will be 7 rupees. This is, in principle, the understanding of passing on the benefit to the customer. If you're not passing on the benefit to the customer, and because you will be profiteering, so at some point in time you thought that this product will fetch me 88 rupees as a sale value, because 12 rupees was the GST that you will be collecting and paying to the department, right? So when you collected 100 rupees, out of that 12 rupees went to department as a GST. So 88 was something that was your revenue. Now you cannot increase that revenue of 88 to 95, saying that no, I'm going to collect 100 rupees MRP, 95 plus 5, because 5 is the new rate. So 5 is something that I'm going to collect, and accordingly I will pay the 5% to the department, and rest of the thing I'll collect. So that type of profiteering is not allowed. Mind you, this is the a very simplest form of example wherein the benefit needs to be passed on to the consumer. Of course, we have to, not exact amount of benefit can be passed on to the benefit, because there will be certain cost increasing and inclusive of prices will be there. So we have, tried to put on the a sort of formula sort of thing, that if existing was 18% and 59 was the inclusive price, 9% was existing GST, and that 18 becomes 5%, then delta is 13, but the reduction in price may be 6.5. So it will effectively be the 11.02% that can be reduction on MRP, and this new MRP needs to be printed inclusive of GST, that is 52.5, as per that current circular, today's circular of legal meteorological. These are certain items which do not have any changes. So 18% was there earlier, and now also it is 18%. This is very important to understand, that certain items are still within the highest or standard bracket. And this is very, very important, that in this particular HSN, certain items have been picked up from 18% to 5%, but there are certain items which remain in 18%. For example, this first, beauty and makeup preparation, including sunscreen. So out of which talcum powder and face powder have been categorically moved, because this is what has been mentioned in press release. So what all remains? That sunscreen remains, moisturizers remains, foundations remains. So all those items are still in 18%. Similarly, oral and dental hygiene, dental floss and toothpaste has been moved to 5%, but mouth rinses and washes has not been moved to 5%, and it is still there in 18%. And there is a clear FAQ about this also, that no, wow, mouthwash are not moved to 5%. It is still there in 18%. And accordingly, we can know that even though there is a single HSN, but some of the items are there which has not been moved to the reduced rate. So this is where I was trying to say that a delta is very huge. So if by mistake you say that, okay, all the oral and dental hygiene items have been removed from 18 to 5% or from 12 to 5%, then you will end up in soup, because these mouth washes are still in 18%. And if you'll pay 5% on that particular item, then department may come and ask for the differential 13% at a later stage. So similarly for shaving cream, shaving lotion, aftershave lotion has been moved to 5%, but there are some pre-shave oils, aftershave oils, pre-shave balms which have been still there in 18%. So this is very important slide, and accordingly the price needs to be changed. Food industry, as I said, food industry is very happy, except those, aerated waters, etc., which does not have any impact as such. We'll see how it does not have any impact. But most of the items have been, shifted from 12 to 18 or 18% to 5%, and some of them have been exempted from. For example, this four items have been shifted from 5 to nil, 0. So UHT milk, paneer, pizza, bread, khakra, chapati, roti, then parotha, paratha, Indian breads, frozen parotha, etc. have been shifted to 5% to nil and 18% to nil. So now there was a dispute, lot of dispute of what is GST rate of roti, what is GST rate of Malabar parotha. There is a number of advanced ruling that has been filed across the country, and there was divergent advanced ruling across the country. Now it has been, put to rest. Now, carbonated, caffeinated, and aerated beverages like Coca-Cola, Red Bull, there is a increase of price, because we were eliminating the looking at elimination of 28% rate. So 40% will be the tax applicable, but that 40% remains as it is, because it was 28% plus 12% compensation cess. And in effect, it was 40%, and now also it will be 40%. Certain more items from 12 to 5%, like condensed milk, butter, ghee, cheese, nuts, animal fats, meat, sugar confectionery. So sugar confectionery, you might recall that popcorn saga, when finance minister said that in case of popcorn there will be three different rates. So that also has been put to rest. Extruded and expanded savory snacks also shifted to 5%. So all the 99% items of food have been shifted to 5%, and some of them are shifted to nil. These are some more. This is what I was talking about in case of beverages. Most of the beverages, I mean, food and beverages, have been shifted to 5%, but the items that are there in 40% are non-alcoholic beverages like energy drinks, like Gatorade, Red Bull, non-caffeinated, etc. It has moved from 18 to 40%. All other items like Coca-Cola, Pepsi, they were already attracting 28 plus 12. So it was in effect 40%, also shifted to 40%. Caffeinated beverages like Monster drinks. So that has also been shifted to 28 to 40%. Here it is Red Bull is caffeinated Red Bull. There are also Red Bull which is non-caffeinated, but that also again is to 40%. Carbonated beverages of food, drink, and carbonated fruit juice like happy fizz and sliced carbonated are shifted to 40%, but which are not carbonated. So if you can see the third item, fruit pulp or fruit juice based drinks other than carbonated or fruit drinks or carbonated beverages with fruit juice like real Tropicana, Maza, and Fruity, it will be shifted from 12 to 5%. So again, this is something which needs to be taken care of, that what all whether that particular product you are dealing it is caffeinated, carbonated or not, and if there is a distinction, then you need to identify and charge accordingly. So these are certain positive and negative pointers for food industry. Mostly all the positive pointers are there, but in case of ITC, as I said, that if certain items are moved from tax rate to nil rate or exempted, then ITC will be blocked, and accordingly business may absorb the cost due to competitive pressure, and the end benefit will be squeezed a bit. And yes, implementation challenges will be there for this type of rate will be applicable on mid of a month or on an odd day of a month. Then pricing, invoicing, staff training, accounting, bookkeeping, documentation, everything will have to be taken care of with a minutest detail. As I said, that there are a couple of issues going on, or some, you can say that debates that were going on. One of the ice cream parlor. So ice cream parlor, earlier it was 18% with GST. Supply of ice cream was treated as a goods. Then at some point in time, when the restaurant rate was reduced to 5%, then parlor started saying that we are restaurant and now we will be issuing 5% without ITC. Then the circular was issued on as is basis, and amendment was confirmed that goods, ice creams are goods, actually goods and not a services. So whatever ice cream parlors are selling are sell of goods and not supply of service, and it is 18%, attracting 18% GST with ITC. But now this 18% ice cream still remains goods, but it has been shifted to 5%. So now not much of an issue. It will be aligned with the recent food rate rationalization from 12 or 18 to 5% with ITC. Please mind it. Paratha and roti, as I said, the issue has been now put to rest. Every roti, paratha, by whatever name it is called, it will attract 5%. That's it. No further debate on that particular thing. Herbal medicine and herbal cosmetics. Regarding Vico turmeric, the company went to Bombay High Court saying that we are basically a cure, Ayurvedic medicament, and we are not cosmetic. So in case of cosmetic, it was attracting 18%, and now it was attracting 5%. Again, this has been put to rest and said that everything will be at 5%, whether it is herbal medicine or herbal cosmetic products. Popcorn saga, that's what we were saying out, and this is something that I told you, that beware of the false news. We have one of the renowned journalist, Rajdeep Sardesai. He tweeted that popcorn debate has been resolved at last. Salted and spicy popcorn will attract a 5% uniform, whether it is sold loose or in pre-packaged form. So what was earlier it was that popcorn mixed with salted and spices sold loose or unlabeled, it was 5%, but it was sold in pre-packaged and labeled form, it was 12%. And it was caramel popcorn, that it was a sugar confectionery item, and it attracted 18%. Now department in this press release issued that every food item will be taxed at 5%. So this 12% will be moved to 5%, and even caramel popcorn will be moved to 5%. But Rajdeep Sardesai tweeted that caramel popcorn will be taxed at 18%. After that, CBIC retweeted saying that all sugar confectionery items will be taxed at 5%. Kindly refrain from sharing the incorrect information. Please see below the rates in annexure 2. So mind you, beware of incorrect information. We might make a mistake. We even I mean, not only the journalists, we as a tax consultants also might make a mistake. So we are requesting you to again check the source of the amendment that you're looking at, which is affecting your company or your client. So all the sugar confectionery items, cocoa, butter, chocolates, everything has been moved to 18 to 5%. So of course, the men, along with other businessmen, even dentists in India will also have a run for money, because people will be eating more chocolates after this rate reduction. Just in a funny sense that I was trying to say. So impact of ITC blockage that we've discussed, that if at all goods are moved from taxable items to nil rated, there will be a ITC blockage, and accordingly there will be a minimum rise in the price because of this ITC blockage, which will increase the cost, and there will be artificial inflation in the sale price, which will not be exactly equal to the benefit to be passed on to the customer. So this is the entire impact on the whatever industry, or maybe food industry, for example. Revaluation of stock, MRP and labeling issues, preventing the undervaluation, phased implementation of this pan masala and gutka. So both the sides of the, I mean, or rather three sides of whoever are having the stake in this particular amendment are going to have a huge task before them. The businessmen or the traders and are going to have this huge task of implementing this thing. As a consultant, we will be having a huge task of advising in a correct fashion, and government will be having a mammoth task in regulating this type of amendment. Health sector, again, 33 life-saving drugs has been completely exempted. 3 critical drugs has been, including cancer, has been reduced to 5%. Other medicines have been issued to 12 to 5%. So drug and medicine, most of the are shifted from 12 to 5%. Medical devices to shifted from 12 to 5%. Spectacles and contact lenses, which are corrective in nature. So on the goggles, which are corrective in nature, so which helps in your correcting the vision, they are shifted from 12 to 5%. But just goggles without any numbers are remains in 18%. Individual and health insurance are shifted from 18 to 0% nil rate. So again, when I say that nil rate, then ITC blockage, and if at all some items from a particular chapter is moved, then there will be classification dispute. And looking at the delta of 13%, there can be inversion in certain scenarios. Handicraft industries, 12 to 5%. Most of the things have been shifted from 12 to 5%. But the problem over here is that in case of job work of the handicraft items, it will attract 18%. So again, there will be problem with this inversion. And a problem is that in case of inverted duty structure refund, I cannot claim the refund of input services. So this again will have a impact and a problem with the eventual price reduction to the customer. Footwear industries very well taken care of. There are two impact. One, there was a basic amount of 1,000 which attracted 12%, and more than 1,000 which attracted 18%. That 1,000 limit, rupees 1,000 limit, is increased to 2,500, and up to 2,500 it's 5%, and more than 2,500 it's 18%. There will be inverted duty structure again, because job work will be at 18% and major raw materials will be at 18%. So we have listed down the certain raw materials are 18%. So again, inverted duty structure refund will come into play. And if we look into in principle, approval by the GST Council, then we'll get this 90% of refund as soon as we file the application on provisional basis. So this is that IDS calculation formula. Similar is the textile industry. In case of textile industry, the rates have been rationalized from 12 to 5%. Just regarding the pieces or per piece, if it is more than 2,500, the textile item, it has increased from 12 to 18%. So again, the number of things remains in 18%, and there would be a lot of inversion. One thing is there, that in case of textile, the job work remains in 5%. So that's again a bit of an upper end as compared to the footwear industry. But in any case, there will be an inverted duty structure. Automobile sector, all the vehicles, except four-wheeler, I mean three-wheelers or two-wheelers, and two-wheelers specifically having less than 350cc, have been shifted from 12%, 28% to 28% plus cess to 18%. The vehicles that remains in 40% is that in case of the engine capacity having more than 1500cc and length exceeding 4000 mm, only that items have been shifted from effective 43% to 40%. Passenger motor cars and station wagons and racing cars have been increased from 45 to 40%, specifically for engine capacity for more than 1500 or 1200 capacity in case of petrol and diesel, as may be applicable. Very important change is that part and accessories of all the motor vehicles have been shifted from 22%. So irrespective whether it is a 40% charge on a 40% rate on the motor vehicle or 18% rate on the motor vehicle, the parts and accessories will be taxed at 18%. This is a very brilliant move, very good move to do away with all the litigation regarding the classification of the parts, because there was a lot of litigations going on as of now also regarding the parts and accessories, distinguishing whether it is a part or accessory, and accordingly there was a litigation. But now that has also been put to rest by this rationalization. Motorcycle, as I said, that More than 350 would be 40%, less than 350 will be 18%. Again, parts will be 18%. Aircraft, if at all somebody is looking for an aircraft, then it's the right time to buy an aircraft, because then after that there will be 9% increase in aircraft for the personal use. Yachts and other vessels for pleasure and sports, same type of things. But in case of boats, it is reduction from 28 to 8%, and seats and tires for all, it will be reduced from 28 to 18%. This is a roughly proposed scenario in the case of the price reduction, but we are already looking at a price reduction by various automobile company, saying that we are reducing the price in case keeping in view this rate rationalization by GST Council, 56 GST Council meeting. Passenger transportation systems, 5% without ITC in case of economy class. Other than economy class, it was 12%. Now it is increased to 18%. And renting of motor vehicle from 12% to 18%. Goods transportation, we all knew that GTA, it was there 5%, then 12%, but 12% is increased to 18%. So same option will remain. And multimodal also, it was 12%. So now 5% without ITC and 18% with ITC. There is new service that we are looking at, because we know that now recently with the change in business models, the tax also needs to be changed, and we are having this new business models of delivery portals, local delivery services like Swiggy, Genie, Uber Courier, and Porter. And they were trying to treat themselves as a GTA, but now they are having their own identification, and it will be taxed in such a fashion that it's an e-commerce operator will have to pay. This is the transaction. If a person books the goods for delivery, it will be paying 100 plus 18. Out of this 100, 80 will go to the delivery partner, 20 will be retained by the e-commerce portal for as its own commission. So on its own commission, obviously the Swiggy Genie, that is e-commerce portal, will be paying the GST, considering it's inclusive or something like that. It will be passing on the 80 rupees to the delivery partner. Delivery partner needs not pay any GST, but whatever 18% that supposed to be paid on this particular transaction, that again Swiggy Genie will have to deposit it on its own to the government. And by this movement, by this move, or by this amendment, the lot of delivery partners will be saved from the compliances of GST, and Swiggy's Genie or Porter will be looking for the compliances of making the payment of GST on behalf of delivery partners. So again, this is in lines with the restaurant services, in lines with the housekeeping and other services that is being provided, wherein e-commerce operators have been given the liability or responsibility to pay the GST on the services provided by small service providers. Cess abolished, but ITC blocked. The new industry road blocked. As I said, that in case of automobile sector, around 2,500 crore of cess compensation cess ITC is blocked. Aerated beverages industries also, because there also compensation cess was there. Coal and lignite sector and tobacco products. So all these four sectors will be hit with this cess items. Of course, in case of aerated beverages and coal, that there may be some movement of goods, or there will be some movement of goods even before 22nd September, but the bigger industry that is going to have a harm or problem will be automobile industry. So this was a news from Financial Express saying that government rules out the cess. So CBSE chairman said that as of now we do not have any mechanism to give the refund or adjustments. So we have requested them to actually look into some mechanism. For example, because as a consultant, when I look back in on 1st of April 2000, 1st of July 2017, when GST law came, therein we had this transition provision that credit of service tax, credit of excise, credit of VAT was available to be adjusted against my liability of CGST, SGST, and IGST. So that type of mechanism can be thought about, and we are not claiming for a refund of entire 2,500 crore, but at least some mechanism can be worked out in the fashion in which that 2,500 amount will be available to such dealers or distributors or the manufacturer to claim as a credit against their liability. It will be in win-win situations. There will be no revenue loss or revenue neutral situation sort of thing. So that's one-time cash refund. Of course, cash refund is not a brilliant option, but convert this credit into fungible credit. IGST credit is a very can be said as a well thought option, and win-win situation can come out. Beauty treatment and cinema, as I said, that 18% with ITC, 5% without ITC in cinematography films. So movie theaters, it was 12% with ITC, now 5% with ITC, and 18% with ITC for more than 100. Construction industry, There's a lot, biggest change is cement, 28% moved to 18%, and some couple of items like sand limes, marble blocks, and granite blocks have been shifted from 12 to 5%. Rest of the things remains unchanged. So this is a rough calculation that we have done, that in case of a residential project where a unit is costing at 4 lakhs, and if we say that out for the construction cost, the cement share is around 15%, so 6 lakhs, and GST rate is 28%. If it is reduced from 28% to 18%, then GST amount on cement from 1,68,000 will be reduced to 1,08,000, and benefit that needs to be passed on to the customer will be 60,000. That is 1.5% of the cost. And if we consider at of the sale value, then it can be around 0.7%, something like that. But this ratio of 15% may keep on changing. Based on that, this calculation can be done. So this is that standard rate of GST applicable on the construction sector, 5% and 1%, and in case of commercial unit it's 12%. So somebody was asking me that whether this 12%, because when it is being said that 12% GST rate has been moved, it has been eliminated, then why still commercial units it's being taxed at 12%? The answer to it is that 12% is basically an effective rate of tax, because in case of construction services we are looking at 1/3 of reduction on account of land. So actually this rate of 1% or 5% is not 1%, 5%. In notification it is 1.5%. In notification it's 7.5%. In notification this 12% is not 12%, it's actually 18%. So this is an effective rate of tax under the construction services when we reduce the 1%. So if a unit is of, for example, 1 crore, commercial unit is of say sale value of 1 crore, then I need to pay GST on 12% on 1 crore, or you remove the 1/3. You come to 67 lakhs, remove the 33 lakhs from the 1 crore, saying that this 1/3 pertains to land. So 67 lakhs and apply 18%, the answer will be same. So it's an effective rate that is generally being told about. So this basically is not 12% rate in the notification, it's actually 18%, but effective rate is 12%. So that is not changed as of now. Job working, very categorically it has been said that these all 5 job working will be moved from 12 to 5% with ITC, but rest of the job work not elsewhere. I mean, so when we're looking at textile, it is not covered above, so it will be covered here, wherein this job work will attract at 18%. We'll have the inverted duty structure in this particular industry, where except these 5 industries. So this is that comparison has been given. So in case of manufacturing of pharmaceutical product, if product is at nil, then what is the job work rate? Again, that is a question. If it is a 18% job work rate is there, then we are having a problem of having this cost increasing in case of pharmaceutical products, where it was supposed to be reduced because the drugs rate has been reduced from 5 or 12% to 0%. So that due to job work rate, which maybe land up 18%, we may create an increase in cost rather than decrease in cost. So these are certain other job working, sector-wise job working that you identified, even though it remains same. But in case of tailoring services, existing it's 12%, it will increase to 18%, and residual item, it will increase from 12% to 18%. Individual health and life insurance. Individual health and life insurance were taxed at 18% with GST. Now it will be exempted from GST, but it needs to be taken care of that what are taxable. So in case of individual life insurance, term life, ULIP, endowment plans, reinsurance are exempted, but group insurances, riders and add-on benefits and general insurances are still remaining under taxable at the rate of 18% with GST. So individual life and health insurance are tax exempted, but rest of them are still taxable at 18% plus GST. Now, when we look at this particular reduction in rate, then can we say that we are the premium that we are paying on individual life insurance and health insurance is going to get reduced? So we have tried to put down certain based on certain industry experts. So industry experts were saying that once we say that there is a reduction in rate of GST, or rather GST will be nil or exempted, then in that case there will be a lot of services at taxed at 18%, for which input tax credit was existing available in existing scenario, it will not be available once the rate of GST is reduced from 18 to 0%, and based on that there will be increase in cost. And Industry Express says that in case of insurance, in the health insurance, it will be increased maybe from 7% to 10%. So we have taken this example that if a base premium is 25,000 and GST rate is 18%, then 29,500 was the eventual cost on the customer. But if we say that after change in rate from 18% to 0, there will be there is an increase in cost of 7%. So applying that increase in cost in 7% of 20,000, so my new base premium will be 26,750. So there will be an increase or saving of 2,750 instead of 4,500, because there will be increase in cost. So difference of 25,000 and 29,500, which comes to 4,500, which is 18% of 25,000. So that entire 4,500 will not be saved, but certain cost increase will be taken care into consideration. And instead of 18%, it will be 9.32% reduction that will be customers will be looking at. And if the cost increase, we can say maximum it is 10%, then again around 7% reduction in premium will be said. But against that, NIVA insurance has said that we are going to pass on the entire benefit of 18% to the customers. So again, following the NIVA insurance, if all other insurance starts giving this entire benefit, then the customer will be the someone who is gaining, and this cost increase will be absorbed by the insurance companies, squeezing their margins at some point in time. So critical issues that if someone has paid the 3 years premium at one shot, what can be done? So I don't think so there will be any refund. Tax has been paid. Time of supply was earlier, and then there is no scene of reduction the tax amount or something like that. What about to insurance existing or ongoing ITC? ITC will be lapsed as per section 18(4). That if any particular item is being taxed, goods or services in tax, and eventually it becomes exempt, then as on date, whatever ITC balance is there needs to be reversed under section 18(4) via form number ITC 03. Multiple year policy, if at one point in time it has been given an unexpired period is there may given pro rata price adjustment for unexpired period for which premium is yet to be paid. Riders and all, of course, please don't get the examination entry wrong, because certain items are still taxable at 18%. Broker agents and commission remains taxable. So whosoever agents are there who are earning the commission from the insurance company about this individual health and individual life insurance, that commission is taxable still at 18%, and there is no exemption given. So this misunderstanding should be avoided. A rebundling of products, it may land up in soup if insurance service providers bundle the taxable along with the exempt policies, and it can elude the dispute. So it's better to keep that particular simple, and tax needs to be paid on whatever taxable products are there. Hotel accommodation, as I said, that on the charges that are room rent that are 7,500 less than or equal to 7, it was 12% with ITC. Now we are looking at 5% without ITC. The moment I'll say without ITC, then again that increasing cost of existing cost, which will eventually increase the sale price of the room rents that are below 7,500, because ITC is no more available. We have given this type of example that in input cost is 960 and the selling price is 7,280. It will increase the price for around 500 rupees, because my cost 960 of ITC will not be available against my 5% GST that is supposed to be paid. So that again needs to be taken into consideration. Coal sector, it is said that 5% plus cess was there, and now it is increased to 18%. But honestly, this 18% as compared to what earlier effective rate of tax was there, it still is at par, and no loss will be the person who are purchasing the coal. But one problem will be that what about the unutilized compensation cess on the coal, which is still lying as a stock on 21st of September 2025. So that point needs to be addressed. That issue need to be addressed by the government. Rest all, you'll get the credit, so no problem with that. Eventually, it will benefit. So we have tried to calculate that benefit also. So, for example, if 2,000 rupees per ton is there, because the cess is on ton basis, So if a base value of 20 lakhs and GST of 5% plus 400 per ton says, then it was coming somewhere around 5 lakhs. But now if I calculate 18% of 20 lakhs, it comes to around 3 lakh 60,000. So, and the customer benefit will be around 1 lakh 40,000. So that again brings in parity with other, fuels which are taxable. Renewable energy sector 5% for solar cookers and solar water heater and system from existing 12%. Again, a very, very good move, but we are looking at inversion that if I am manufacturing of such renewable devices, solar glass is taxed at 18%, EVA sheet is taxed at 18%, solar battery is taxed at 18%. So I'm looking at inversion of this amount in this particular example. So there will be inverted duty structure and I will have to claim. So in principle, it is very important that the field formation or departmental officers adopt the policy of allowing 90% provisional refund at a very early stage. Otherwise, the cash flow will be blocked. Education sector, again, students are going to get benefit because erasers, maps, pencils, pencil sharpeners, exercise books are were taxed at 5% or 12% respectively have been moved to 0%. Mathematical boxes and geometry boxes and color boxes have been shifted from 12% to 5%. Similarly, there are some certain other goods items who've been shifted from either 12% or 5% to 12% or 12% from to 5% or nil rate or 18%. And accordingly, the paper industry is going to see certain mixed sort of changes. This basically item 4802 is having two different rate that has been proposed. That uncoated paper and paperboard used for exercise book, existing rate was 12%, proposed rate is 0%. But same uncoated paper and paperboard, if it are used for writing, printing, and other graphic purpose, then it is moved from 12 to 8%. This may create a complication. This may create this classification issue and may invite the litigation. So we are going to represent for this particular thing also that better you clarify what needs to be changed or what needs to be done, or you put a parity on everything. You can shift on 5% rather than giving the entire exemption and give 5% to all the paper items, and that will give a parity to entire thing. So yeah, this is what we have discussed about the paper industry having this supplier dilemma. If somebody comes for buying the paper and paperboard, he will not be able to identify that whether the person who is consuming this particular paper is going to use for notebooks or general printing paper, because the quality of the paper and paperboard remains same. There's no distinction as such. So a supplier is having dilemma that whether he should be charging 0% or 18% based on the use of the the person who has come to purchase that particular product. Agriculture sector again is benefited a lot from 12%. All these items have been shifted to 5%. Of 84 is machinery items and 87 is basically certain vehicles specifically for that agriculture. There's farm tractors, hand propelled vehicles like hand cars, rickshaws, and animal drawn vehicles, then self-loading and self-unloading trailers for agriculture purpose. Then certain items like sprinklers, nozzles, drip irrigation systems, hand pumps have been shifted to 12 to 5%. There will be a lot of savings in this case. There will be no inversion. That is something that we have tried to calculate from this particular amendment rate. Fertilizer sector, again, the farmers are to benefited from 5 or 18% to, or 12 or 18% to 5%. A very welcome change for the farmers. Again, no inversion will be there because a lot of inputs that has been used for manufacturing of fertilizers are taxed at 5%, and based on that, there will be no inversion as such on the rate rationalization in fertilizer industry. Wood sector. Wood sector again is benefited and rates are reduced from 12% to 5%. Mostly entire woods are being shifted from 12% to 5%. So this industry need to rejoice. Defense sector against from 12% to 5% and 18% to nil rate. Something that government themselves is going to get benefit. Again, a big sector is getting benefits. The consumable electronic items, air conditioned machineries, dishwashing machines, and television sets, which were taxed at 28%, now shifted to 18%. A very, very welcome move. Again, we are going to look at this problem that is going to face by the manufacturer of this particular electronic consumer electronic items, because they have to change that MRP, they have to go and put the stamp of or sticker of new MRP at each and every places where the stock are lying. So hell lot of tasks and member tasks to be taken care of by the consumer electronic items, and especially during Navratri and Diwali there will be a huge sale of these items. But mind you, mobile, laptops, smartwatches, and Bluetooth speakers, there is no change. 18% remains with ITC. This is something that we have calculated about the probable saving by the customer, and believe me, you are going to get a lot of benefit, specifically on the automobiles and these consumer electronic items during this festive seasons. Sports goods, toy, everything moved from 12 to 5%. A very welcome move. Casino, race clubs, and IPL tickets increased from 28 to 40%. So government says that if you want to play big, then pay big. Indoor games, 5%, cricket balls and cricket bats and badminton rackets from 5%. But IPL tickets is increased to 40%. And there's a clear FAQ in the press release. Along with that, there was an FAQ list wherein it was given that IPL tickets will be at tax at 40%. So admission to casino, race clubs, sporting events other than recognized, such as IPL, 28% with ITC increased to 40% with ITC. Race clubs, actionable claims like betting, casino, lottery, online money gaming will come soon on this online money gaming, because as of now that amount it's still that 28 to 40%. But the issue with online money gaming is that in August 25, Online Gaming Act was enacted and it has banned all the online money gaming, made it illegal and halted the platform operations from August 2025. So even though casino and along with this online money gaming is taxed at 28% to 40%, but now since it is banned, so that is of redundant. Admission to sporting event 2000. So if I'm going to go for an IPL, earlier it was the ticket of 2000 used to cost me 2560. Now it is going to increase to 40 and new price will be 2800 for IPL tickets. So if you want to go and enjoy and have entertainment in an IPL, it is going to cost you. So this is the Gamecraft, the online gaming system which was been taxed, and 21,000 crore GST demand was issued on name Gamecraft. And Karnataka High Court says that Rummy is a game of skill and not gambling, and 21,000 notice was declared illegal without jurisdiction. Matter reached to the Supreme Court, and Supreme Court has stayed this particular order of Karnataka High Court. So we are going to have a huge debate coming across for this thing. But as of now, this gamings have been banned, or it has been termed as an illegal in the country. Tobacco sector, a BD and Indian Katha has been shifted from 18 to 5%, and BD paper, sorry, Tendu, and BD has been shifted from 28 to 18%. Of course, the impact says that of course it is going to have the health risk, but the small time rural workers are earning. So based on that, they have given this particular change or reduction in rate. But these all items will be increased from 28 plus cess to 40%. Unmanufactured tobacco, cigar, cheroots, other manufactured tobacco. But mind you, this rate of 40% will not give an effect from, will not be affected from 22nd of September. A date will be notified at a later stage by the finance minister for the giving effect of these particular items. So this is very important to be noted. Again, compensation cess problem will be there. Now, in case of tobacco products, new retail sale price based valuation will be introduced. So as of now, till date, since the beginning of GST, we were having this transaction value based GST. So whatever transaction value is there on which GST is to be paid, whatever retail sales price is there, or maybe MRP price is there. Of course, you cannot collect more than MRP, but you can collect less than MRP. But whatever price was transaction value, GST was supposed to be collected on that. For the first time, the government is deviating from the valuation, transaction based valuation, to retail sales price based valuation, specifically from pan masala, gutka, and cigarettes. As of now, it is talked about that RSP will be applicable on such items like pan masala, gutka, cigarettes, unmanufactured tobacco, and chewing tobacco like zarda. So again, we are going to see an amendment in section 15 to accommodate this RSP based valuation for this limited products. This is very important. Post sale discount had a lot of litigations across the board. FMCG products or pharmaceutical FMCG manufacturers or pharmaceutical manufacturer used to give a lot of discounts to its dealers, distributors, stockists, etc. In manner of price reduction by way of this discounts, maybe trade discounts or incentives in form of or discount in form of turnover discounts. If you achieved certain turnover, then also credit notes were given giving the discounts. So post sale discounts was or rather is a very important factor in FMCG sector and pharmaceutical sector, mainly in these two sectors. And they were having a lot of demand from the department, because section 15(3)(b)(1) said that if any post supply discount is given, then that discount needs to be established by way of written agreement, and it needs to be linked with the relevant invoices, which was very difficult at later stage. And department used to raise the demand on this type of credit notes given. And if at all some GST credit was not given and commercial and financial credit notes were given, then department was saying that ITC needs to be reversed at the recipient end, because that much amount is less paid by the recipient to the supplier, and then this less paid, then proportionate ITC needs to be reversed. So now these both the litigation or probable disputes have been put to an end by this proposal. Of course, we'll have to wait till the next budget session, because this section 15 can be amended only in the budget by way of amendment in the Finance Act, GST Act. And the proposal is such that the 15(3)(b)(1) will be deleted, omitted, which has this requirement of establishing the discount in terms of agreement prior to that post supply discount, and also the condition of linking that GST credit note with relevant invoices. So these two conditions will be deleted, which was there in 15(3)(b)(1). Then amendment will be carried out in 15(3)(b), saying that the post-sale discount credit note will be given in accordance with section 34, and simultaneously section 34 will be amended, wherein this it will be saying that if my recipient is reducing his ITC, then GST credit note will be given without any conditions attached to it. Simultaneously, it is also proposed that some clarification needs to be given that no reversal of ITC will be demanded in case of post-sale discount given through financial or commercial credit note. Then treatment of post-sale discount provided by manufacturer to the dealer as additional consideration in transaction between dealer and customer. So these post-sale discount will not be treated as an additional consideration to the dealer. Then post-sale discount shall not be considered as a consideration for the promotional activities done by the dealer or distributor for the manufacturer. So these three clarification needs to be will be given in due course, and this is going to put down the rest to a huge many of litigation that we are looking as of now also in case of pharmaceutical industry and FMCG industry. Circular will also be provided to relieve the industry's related demand of reversal of ITC on post-sale discount granted to commercial credit notes and incentive given to, and there was circular which said that CS certificate needs to be given to establish the conditions of section 15(3)(b)(1), and the circular linking with 15(3)(b)(1) and 34 will be withdrawn. It will be rescinded because it will be of no use, keeping in mind this amendment that is being carried out. So proposed provision says that year-end discount will be valid given through credit note under section 34. No time limit will be given. It will be, credit note time limit can be issued only if time limit has been. Commercial credit note can be issued, but ITC reversal will not be there. So turnover based discount, no more linkages with invoice, and procedure will be simplified. ITC reversal will not be required in case of commercial credit note, but in case of GST credit note, it will be linkage to an IMS system, and I can very well make sure that my recipient has accepted the credit note. So in a way, he has reduced his ITC. So that condition will be easily fulfilled. Another major change that we are looking at is a place of supply of intermediary services. A place of supply of intermediary services. So we knew that there are certain agents in India who are operating on behalf of foreign universities, and were promoting the students to accept the admission in the foreign university, and foreign university used to give the commission to those agents in India, then in that case, due to this section 13(8) intermediary services, even though the agents were earning the foreign currency, the tax was supposed to be paid. Of course, this particular transaction of foreign agents of university has been taken care of by Supreme Court judgment that they are not an intermediary service. So, but apart from that, if at all some agents are having this intermediary service impact of 13(8), this 13(8) section is the intermediary definition in 13(8) is proposed to be deleted, and now the agent will be treated at par with any other professionals or technical service provider who are treated as an export service provider. So an agent will also be treated as an export service provider, and whatever foreign currency it's earning, the exports benefit will be given. ITC refund can be claimed by the intermediaries. So again, a very, very welcome change, very, very needed change that has been given. But a flip side is that in case of an intermediary services being received from outside India to a manufacturer in India or to a person in India, then that will attract RCM, which was not as of now, but that will attract RCM. Of course, I'll pay GST under RCM in cash and claim the refund. So in effect, that also will be a revenue neutral situation. So that would be again a win-win situation on either side. Rate rationalization in certain other items like latex, rubber bands from 12 to 5%, and some of them are kept in 18% only. In case of menthol, if it is a natural menthol, then 12 to 5%. It's unnatural menthol, then 12 to 18%. Glass and flint buttons, so that there again you need to take care that certain items are there still then 18%. For example, non-corrective spectacles are still remaining 18%. Mining industry, a lot many things have been moved from 12 to 18%, but certain petroleum items licenses have been 12 to 12%, any other chapter, but this is again seems to be an 18% over here only. 12 to 5% for certain, residual items like live horses, milk cans of aluminum, bell, gongs, coil products, and slide fasteners. Certain more items, residual items, which have been moved from 18% to nil. Again, these are some unusual, not so common type of items. Again, some pumps and electric accumulators, which has been shifted from 28% to 18%. This will again help in rationalization the prices of the person who are consuming these items or purchasing these engine items or manufacturing of equipments. Personal use dutiable articles which are imported are tax rate, VAT tax rate 28%, now proposed rate is 18%. And certain drugs and medicines that are intended to be imported from outside India, they are moved from 12 to 5%. Waste treatment rationalization on the services is 12% with ITC to 5% with ITC. So these are all section-wise impact and opportunities. Mostly in all the items, there is a lot of opportunity and impact, positive impact, mainly due to reduction in rate. But yes, you need to keep into mind that where the goods or services were taxed earlier and now been shifted to nil or exempted, we are going to get this ITC blockage, and accordingly there will be a bit of an reduced benefit will be passed to the customers. So this is what I was talking about, side effects of ITC balances. ITC reversal on exempted items, loss of ITC on rate reduced items, insurance and services where credits will be disallowed, and increasing operational cost. Delayed purchases, because as of now nobody is going to go and buy the car because they will be waiting for the new rate will be applicable, and accordingly benefit will be passed on. And then compliance burden, of course, businesses must relabel MRP, as we recently saw in the earlier slide that Legal Metrological Act, the government issued this particular circular wherein MRP, relabeling of MRP with revised prices needs to be printed before it is sold after 22nd of September. And of course, we are having our own doubt about this provisional 90% refund to be given at the outset by the departmental officers. So absence of transitional provisions of ITC that we had talked about, post-sale discounts, ambiguities, we'll have to see and wait and watch till the proper clear circular has been issued. valuation shift from transaction based value to RSP, that is retail sale price based valuation. And of course, well, there will be some broader systematic issues. For example, it has been said that simplified registration will be given in 3 days. How in effect and how that very well this is been implemented at a ground level, we needs to be checked. Refund recommendations, we saw that a proper officer needs to be fined that if it is a risk-free application, then needs to give out and out refund. And if at all refund is not given, then the officer have to put the reasons to be recorded in writing, that why the refund is not given at the outset. 90% refund, provisional refund is not given at the outset, and why it has been picked up for the detailed scrutiny of the refund. So, but we have to wait and watch till the proper circular and provisions has been incorporated in the law to giving effect of this particular change that has been recommended. So brief and recommendation, that is what we are looking at. Legal amendment is required in certain sections on certain rules that we are looking at, but provisional refund can be withheld by the but for the reasons to be recorded in writing, and it will be implemented in principle from 1st of November, even though the amendment is not carried out in GST Act and rules. GST Tribunal to be operational. So end of September, GST Tribunal will be start accepting the appeals. So in short time, it will be declared that the portal is operational for filing of GST appeals. So it will start accepting the appeals. Hearing will come in somewhere in the end of the December 2025, and whatever appeals that are required to be filed as of now, that backlog needs to be cleared or filed before 30th of June 2026. One important part is that this GST tribunal will work as a national entity, a national appellate authority for advanced ruling, because looking at a multiple and divergent, advanced ruling being passed, rulings being passed by the various advanced ruling of the state, then there was a need of a unified or uniform appellate authority for advanced ruling. I'll just give you an example of what could be the issue. This is a practical issue that was there, that in case of developed plots being sold, residential plots being sold, Gujarat Advanced Ruling Authority, in case of Dipesh Anil Kumar Naik, it ruled out that the sale of plots will be attracted GST at the rate of 5%, considering it as a residential accommodation. But appellate authority of Gujarat said that no, it is not 5%, it is actually taxed at 18%. So again, a divergent rule. The person who filed the refund, the advance ruling application, was looking at 0%. But advance ruling said that 5%, and appellate said that no, it's 18%. And simultaneously, if you check the date, simultaneously in Goa, somebody else filed an advance ruling application, it was given no, 0% will be applicable. Circular was issued thereafter that look, there is a problem with the understanding. So every developed plot needs to be with the basic amenities. It is a sale of land, schedule 3 items, and no GST will be. So this is an example wherein the divergent advanced ruling were issued by states advanced ruling authorities. So to keep a check on it, the principal bench of G state in Delhi will act as an national appellate authority for advanced ruling, and which is very much very well needed as of now. And it will keep in check the divergent advanced ruling that has been filed, that has been given by the advanced ruling authority. Simplified GST registration, the requirement is that the suppliers B2B criteria, the applicant will have to say that my tax liability per month is less than 2.5 lakhs to B2B, to registered person. So again, this declaration needs to be given by the applicant. It is not sure that whether that declaration can be challenged by the officer or not, or the applicants or departmental officer may come and say that no, I do not accept this tax liability which you said that less than 2.5 lakhs per person, so I will not give you the registration within 3 days. So again, we need to check the proper provision of the law which will accommodate this type of facility being given. And of course, this simplified GST registration and this declaration are optional. Normally, you can go in normal registration as well. But if you want to go for an automated registration, which needs to be given in 3 working days, then you have to select this particular simplified GST registration. we are yet to check the provisions of this particular amendment which is recommended, and in what fashion it will be implemented at a ground level. So objective is quite simple: to ease the compliance of small suppliers, making interstate supplies a very simple GST registration for small suppliers who are supplying through e-commerce operator. There is a thought that they will not be required to obtain registration in each and every state wherein they are supplying the goods, but a principal place of business will be enough. And from there, if they are supplying only through e-commerce portal, then a principal place of business in a place where they are operating will be proper, and there is no need to add any other place of business in any other states. But again, this has been approved in principle. Detailed modalities to be presented before GST Council. So again, this will be implemented in next GST Council meeting. So after 56th GST Council meeting, whole India is in Rahul Gandhi mode, saying that yes, maza aa gaya. We have enjoyed the council meetings, recommendations. We are very much eager to see the recommendation that has been given in 56th GST Council meeting being implemented, and the benefits to be passed on to the end customer in right sense, in the real sense, and then and only then we can say that this festive season of Navratri and Diwali is actually, the government is giving bonus to its citizens by way of this positive, very positive recommendations by GST Council meeting. Now, when GST was given, it was GST 1.0. GST 2.0 is, of course, very, very improved version. And now, having looked at GST 2.0, we will obviously be looking at GST 3.0, where in this particular more benefits we need to check for or expect for more benefits to be given in 3.0. So that is all from my side, Maulik bhai. And yeah, if at all there are certain questions, we can take up as of now, because I think I have tried to finish it on time. It's now more or less 7.
Yes. So, thank you, Rashmi sir, for such an exciting and detailed presentation to us, and for the benefit of all of the participants. Now, there is one question in the chat box, which is being asked as anti-profiteering provision sunset was with effect from 31st March 2025. So, if you can answer that question.
Yeah, so I agree that sunset was regarding the application to be accepted by National Anti-Profiteering Authority. So sunset clause was not for section 171. Section 171 was not deleted, or it is not deleted as of now. It is there, and section 127 in principle it is still there in the law. So by certain other modalities, department may come and introduce some other measures by which it can check that anti-profiteering is not being anti-profiteering is not. I mean, businesses are not getting profited by reduction in rate. So that check and balances will always be there with the government. So National Anti-Profiting Authority, which is there in Delhi and which is doing all these things, they will not accept application, but by some measure, by some other modality, it may come into effect.
Okay. So there is one more question, wherein the question is that any changes in real estate sector, such as new category that is premium housing, it has been heard somewhere, but it was not covered in your slide. So the question has been asked by a participant.
So what's the question exactly?
The question is effectively the question is whether there is any premium housing category like that into the real estate sector.
No such premium housing category being introduced as of now. The housing category remains there in 5%. There is no such recommendation or proposal. Rather, there was a representation, or there is a requirement from the real estate sectors that just like residential sector, which is having 5% without ITC, we want commercial sector also with 5% without ITC. But that was not considered by the council in this particular meeting. So that is one of the thing. And one more thing, that regarding the JDA and joint development agreements and transfer of development rights, etc., people were expecting some clarification from the government or some discussion to be carried out at this council meeting, but that also was not done. So
Yes.
there's a couple of items which real estate sectors have been asking for.
So as rightly said by you that we should not, everyone participant and any one of us should not go over just the news which is coming around. We should ideally go through the press release and wait for the notifications to get a correct answer. And sir, we have two more questions. So post it, we will stop the Q&A. Another question is the common which you had already covered, but I'm just repeating since it has been asked 4 times in the chat. It is that in case and there is a rate change to 0, does the any accumulated ITC needs to be reversed or not?
Yeah, of course. As per Section 18, needs to be reversed, and needs to be worked out, and ITC 03 needs to be filed. I mean, there is a specific provision for this, a specific
Yeah.
provision and procedure given for this, so that needs to be done, and it needs to be followed.
Okay. And so the last question is that where there is the multiple model transport of goods happening. So in the press release, it has been said that it would be charged at 5% where no leg of transport is through air with
Hmm.
restricted.
Yes.
So if just throw some light on that question.
Yeah, that's right. I've just skipped that particular slide, but it was there in my slide. In multimodal transport, if there is no air, then there is a bit of ITC also available on that particular transaction, and
Yeah.
otherwise ITC is not available. Hold on for a second. Yeah, supply of multimodal good transport of goods, it was 12% with ITC, but 5% where no leg of transport is through air with restricted ITC. So that is 5% of input services of goods transportation. And if it is air transport is there, then it is 18% with ITC.
Okay.
Yeah.
Thank you. So over to Dipti for vote of thanks and closure of the session.
Okay.
Thank you.
Yes, Dipti.
Yeah. Thank you, Rasmin sir, for this wonderful, very insightful today's presentation. A very short of time, itne kam samay mein you prepared so many slides and a complete overview on whatever the changes in this council meeting we had, and truly analyzing it very well, the impact of it on the economy, on business, and the individuals. So very insightful presentation, and we would like to have more presentations from your side
Thank you.
at our platform. And on behalf of Gyaanstation, Income Tax Bar Association, AGFTC, and GSTBA and Choice Group, we really thank you to you and Amish sir for devoting your valuable time and studying so hard, because 48 hours of study is needed to give a presentation of 1 or 1.5 hour for a speaker. So thank you for showing all that dedication to enlighten our audience and serve the professionals.
Thank you.
Thank you
Thank
so
you.
much.
Thank you, Rasmi
Thank you.
sir. Thank you. Thank you.
Thank you, sir.
Yeah, bye.
We have also shared the community Gyaanstation community link, so you can join that. We will be providing all the webinars which we are conducting. All that PPT and video recording will be provided to all the participants in that community. So please join that. Thank you. And we'll
Thank
keep
you.
coming up with sessions like this with the help of all the associate organization. It's a combined effort of so many people's, their committees, and so many people are involved behind this one session every week, which we come up with. Thank you, panel, for this wonderful moderation of today. And thank you, Maulik ji, Ashutosh ji, and everyone who are associated with us for organizing it. Stay tuned
Thank you.
and take good care of yourself. Thank you so much.
Good evening. Good evening. Thank you. Bye.